हेलो एंड वेलकम टू वेल्थ लैब। मैं हूं सक्षम आहूजा और आज मैं आपको लेके जाने वाला हूं थ्रू द लैब लुक बैक। उसका टाइटल है बियर्स इन द ड्राइविंग सीट। सो दिस इज़ अ वीकली थिंग दैट वी आर गोइंग टू डू, जिसमें वी विल टेक यू कि पिछले हफ्ते क्या हुआ, कहाँ रिलेटिव स्ट्रेंथ इंक्रीज़ हुआ, कहाँ सेक्टर रोटेट हो रहा है, मार्केट क्या सिग्नल कर रहा है कि इज़ द एनवायरनमेंट more optimistic, pessimistic, what does data say about the trading and investing environment that is out there. In the previous week हमने देखा कि bears are actually in the driving seat, and I will take you through this whole thing through a blog that I have written, and we'll take you through it one by one. So let's see the market pulse. Before we start this, I would like to inform you that I am Saksham Ahuja. I have been investing, trading, distributing since the past 5 to 6 years, and over this time, I have read a lot, I have learned a lot, and WealthLab is my product, and this is my way uh, to strengthen my learning as well as giving some information that most people miss out through the medium of WealthLab. So let's take you through market pulse. So we saw that the market closed by 1.44% down versus last week. But one new thing that we are seeing is that this is the second time in the past 10 days that the rotation signal has been moved from large caps to small and mid caps. We'll go more through it soon. Percentage of stocks above 200 DMA is at below 20%, so that's not a great sign. And declines have been more this week versus the advances. So this is the sector ratio chart, which is now signaling small mid. So it's a ratio of small mid versus Nifty 100, and whenever it goes up, it means that it signals that small and mid cap should be preferred. It's a 200 DMA line in the middle. So 200 DMA ratio of Nifty mid small 400 and Nifty 100. So it is signaling an up move. But if you look for the longer term, it has been down. It can just be it is a downward sloping graph unless there is a change in polarity. But we still feel that we should watch out more over here before we change our allocation from large caps to mid and small caps. So that is one thing. Now let's take a look at the breadth snapshot. So we closed 1.4% now, and broadly the market participated everywhere. तो 200 DMA में भी हिट है, 100 DMA में भी हिट है, 50 में भी हिट है. The only silver lining here is the Nifty 52 week low versus high. So the lows are lesser this week as they were last week. So the selling is there, it is broad based, but the intensity of the selling seems to be coming down over here. Very close, stage 2%. So I'm sure not a lot of stocks which were strong lost their strength. So this is very similar. So this is one silver lining, that the speed of net new lows is now decreasing. Now let's go to the big movers. So 141 stocks out of 2000 stocks we analyze traded up 4% in the last week, and that is a 6-time difference between what did a down week, 4% down week with Nifty last week. So stage 2 is basically momentum stocks. So where in this current market do we see momentum or price moving? So the new additions that we are seeing are hospitals, 3, which is let's put them in the same bucket. Okay, hospital, pharma formulations are also there, pharma CDMO is also there. 5 out of 16, so roughly 30% is coming out of pharma healthcare space. So I think that really needs to be looked at. Private banks are there, of course, so that is also something that needs to be looked at with the whole public bank move over the past couple of weeks. If we go further, then we'll see the top news to stage 2 entries, and there is MCure, which is of interest to me. I posted on Twitter also, and I have a position in MCure, so it's there. And there is metal, I don't think we should be considering. There's another Astra DM, maybe this can be looked at. So these are the stage 2 entries for people who play with momentum. Now if you look at the relative strength across the market, this is the relative strength graph. So the average RS is written over here. So if you look at the relative strength over the past market, then defense, which has been the strongest, has lost some relative strength. Services also, minings also. What was picked up is food, agri, BFSI, and somewhat in auto. This must be ancillary. this is how things are positioned sectorally, how things are going. Then we'll have to most probably do a deeper dive. So, but the leaders of the past have now been giving up. So, new leadership will be emerging, and now the biggest RS gainers for the last week is diversified, of course, cement and paint and adhesives. So, and railways had a free fall of 9.8 relative strength. So, it is all these are defensive, low RS sectors that are now picking into, and capital is looking for shelter over here, as we say. So, all of this data is through WealthLab. Over here, we explore the RS and stage 2 winners, and it takes you through all the stocks, the whole market breadth. We have market breadth, we have RS analysis, stage 2 industry. We take you through all the data, properly categorized, listed, exploration tool, stage 2 entries, weekly movers, all the data over here. And this is, you can explore this product. We have a free trial going on. So, the key takeaway from last week is that it does not leave much room for optimism in the short run. So, in the short run, we still have to see volatility. Breath is broken and stage 2 has slipped to 7%. This needs to be watched out. We need to see the leaders if they are holding. We need to see what is turning from the lows. The only silver lining is the new lows that contracted. That is it. But the safer sectors like FMCG, capital heavy cement, paint adhesives, etc., they are moving into strength. So these are defenses, we can move towards there. This is what happened in markets this week, sorry. And thank you for tuning in. If you have learned anything through this YouTube video, through this channel, through WealthLab, I would request you to like and subscribe and share this with someone who might need it. And see you next week with the lab look back.